Hey friends, welcome to Smart Money Experts. On this channel you will get the hottest stocks tips and alerts to trade in the direction of the smart money institutions and influencers. If this sounds good to you, please hit that like and subscribe button, with bell notification turn on to all, so you don't miss out on the hottest trending stocks alert, and miss out on some serious gains. But before we begin, please know I am not a financial advisor, I'm just a virtual computer program to give you the best stock tips for you to do your own research. The channel's material is only for education and entertainment purposes only. Alright. Let's get this money. Here we go. These are the top 3 stocks picks, from the top influencers with over 100,000 subscribers on their channel. If you want the full video to these stocks picks, the links to their channel will be in the descriptions. Let's get this money. The first stocks picks is from the Traveling Trader, with 203,000 subscribers on his channel.
What is going on, traders? Welcome back to the Traveling Trader. Now, unless you've been hiding under a rock, you know that we are in the middle of a potential stock market correction. Otherwise, the short version is I don't think we're heading towards a bear market, and I think we do have some catalysts upcoming. One of them being the $1.9 trillion stimulus package, and we are one step closer to getting that. So without further ado, let's get right into it. All right, guys, back at the desk. Just a couple of things I wanted to point out to you before we actually get into the stocks. There was a research paper done by Deutsche Bank, and in this research paper, they uncovered that young millennials, those aged 25 to 34, plan to put 50% of their anticipated payments from Uncle Sam into the stock market. And for Gen Zs, those who are aged 18 to 24, plan to put 40% of that money in the stock market. So there are two main reasons why I'm highlighting this. The first one is obvious. Obviously, more money pouring into the stock market means that equities will likely inch higher. And the other reason I'm highlighting this is that, as we saw from the first stimulus bill, not everybody needs the money in the same degree. A lot of that first wave of stimulus money actually did make it into the stock market, and a huge percentage of that was also spent on the retail sector, which I guess it's part of the reason why you do a stimulus anyway, to try to boost the economy, give people extra money that they will then pour into the economy. But if a huge percentage of the population is actually not spending it on necessities, then that means that the economy is likely in a better shape than thought. All right, and the second major thing that I wanted to talk about is inflation. So as we're seeing with the bond yields rising up, that is due to the perceived rise in inflation. So inflation actually hasn't risen yet, but the expectation that inflation will rise. And that leads investors to act in a certain way where bond rates then start to go up. Now, moreover, in order to curb inflation, so if we have $1.9 trillion in stimulus coming, in order to curb that inflation, the Fed might need to raise interest rates. So as of now, the Fed hasn't done anything. So the bond rates are rising because of how investors are transacting with regards to bonds in the bond market. However, the Fed themselves have not raised the interest rates yet, but they will likely need to raise the interest rates at some point within the next 1 to 2 years. So there could be this battle going on between stimulus coming in and likely boosting the economy, as well as boosting equity prices, and the potential for the Fed to raise rates in order to curb inflation, which will then hurt equities. Now, we've had situations in the past where the stock market rises even though we do get a rate hike. However, the initial effect of a rate hike will have an immediate negative response, most likely on the stock market, and then the stock market can then potentially level out and continue to rise then. So just because we have rising rates doesn't mean that the stock market is going to go down that whole time. All right, well, what stocks am I bullish on if we do get stimulus passed? Well, in the market update video where I discussed whether I think we're going to be in a bear market or not, newsflash, no, in my view, we're not. I think that it is going to be a standard correction. Obviously, I could be wrong. But in that video, I was talking about a rotation. So there is a rotation happening where investors are rotating out of growth stocks. That's why you see the NASDAQ tanking, and the big names, the big FANG names, right, like Apple, Amazon, etc., are starting to wane. However, they've obviously had astronomical growth even during the pandemic. But we now want to rotate out of some of those stocks into stocks that will benefit from not only a recovery, but also stimulus. And one of those sectors is the airline sector. This is not a surprise. So a lot of that money coming from the stimulus, we don't know the exact details yet, but a lot of it is going to go most likely into the airline industry. Now, lucky for you, there's actually an easy ETF to invest. If you don't want to pick and choose which airlines you want to invest in, if you want to invest in Spirit Airlines or Southwest or American Airlines, you can buy the JETS ETF. The ticker symbol is JETS. Now, there is about 20% upside until we get back to the pre-COVID levels, which we will. It's just a matter of time, obviously. Is it going to happen this year? Is it going to happen next year? Who knows? These are all long-term plays, by the way. Do not think of this as a swing trade. So, you know, if you happen to enter one of these, obviously you're entering at your own risk and your own decision. But if you happen to enter one of these, you know, you should not monitor this on a day-to-day basis and a week later say, oh my God, this is not mooning. You know, what's wrong with the stock? These are all long-term plays. So JETS ETF has about 20% upside just to get back to pre-COVID levels. Now, JETS also does pay out a dividend. Currently, it is a pretty weak dividend. However, it is a dividend nonetheless. And if we look at their holdings, you can see here what they hold and what percentage. So almost 11% in Southwest Airlines, 10.5% in American, 9.8% in Delta, 9.3% in United. You can Google this on your own, but you can see that the top American airlines are here, and then they also do have Air Canada sprinkled in there as well.
Thank you, Traveling Trader, for our first stock picks on our list. Let's now go on to the second stock picks. Next, here we have top influencer Keenan Grace, and he has 209,000 subscribers on his channel. Again, the link to his channel will be in the descriptions. Now let's get this money.
This is not financial advice. I just hope you brought your oven mitts, baby, because it's about to get hot in the kitchen. And don't invest in the companies that you don't understand and don't believe in, because if they dip, you're not gonna buy the dip, and then you're gonna sell low and be right back here crying to me, and I'm not having that. So if you can't handle the heat of these hot stocks, then stay out of the kitchen and consider investing in the index funds. Now hit that like button, hit that notification bell. Let's get straight to the point and subscribe to the channel. And the first banger on the list is Roblox, ticker symbol RBLX, and they're expected to go public on Wednesday, March 10th, but not through a traditional IPO. According to Yahoo Finance, Roblox will have a direct listing, and this is where shareholders sell existing shares to the public, but they don't issue new shares like in a traditional IPO. According to Yahoo Finance, Roblox is expected to start trading at a price target of $45 a share. I want you to take that number with a grain of salt, because Yahoo Finance also thought that Airbnb was going to be $70 or somewhere around, and it ended up IPOing at $140 or just somewhere around. So now, who is Roblox? They're a video game company that makes online games for kids. However, you may find this hard to believe, but they have a comparable user base size to Fortnite. Roblox has 32 million daily active users on their platform, and for comparison, Epic Games, who is the developer of Fortnite, they said this: they had 31 million active users, active daily users. And what does this mean? That means that Roblox is an extremely popular company with the younger generation. And you know what? They're not actually a game developer, but they provide a platform for game developers to give experiences to the younger generation via avatars that run around in 3D world on their platform. So now, how much money are they making and how are they making it? They sell an in-game currency called Robux. And you know what? People buy Robux with real bucks, and next thing you know, this company made almost $1 billion selling fake money on a game. Now, they are up 82% revenue from last year. And again, with IPOs and direct listings and things like that, traditionally, sometimes they run up and then crash. Like 9 times out of 10, they run up out the gate and then they crash back down and correct to a more normal state. However, if you want to get into this one, this is how we're gonna play this one. You gotta have a plan. Remember, you don't drive into a wall like a crash test dummy with no plan. You gotta have a plan. And our plan to get into this, if you believe in this company, is strike days, aka you strike on a specific day. You average in and ease into your position. You don't just go all in at once. So how do we do this? Let's say you have $300 that you're willing to play and put into Roblox because you want to invest and plant seed into this company. So now, this is how you ease into your position. You got $300, it's coming out on Wednesday, so then you would only put a third of your money in on Wednesday. None of this is financial advice. You do your own research, you set your own plan, but I'm gonna tell you the game plan. I told you, I'm like the coach. I can write up the play, but you gotta run the ball and run the play. But do your own research. Now here we go. On Wednesday, $100, bow. And then you gotta wait. You gotta be patient, baby. You gotta wait and then allow for a week to pass and then put your next 100 on it, bow, on the next Wednesday. You got to see the fluctuation. What is the market doing? How is the market reacting to this? And then, you know what? You still got some cash. It could dip, it could run. If it runs, you got some skin in the game. If it dips, you know what? You got money to buy the dip. You believe in the company, right? So now you buy the dip, and you do this on 3 different Wednesdays. You strike on different days. Now, how long are we holding on to this one? At least a year. Minimum a year. You might believe in this company, you want to hold it longer than that.
Thank you, Keenan, for our second stock picks on our list. Let's now go on to the final stock picks of the day. Finally, here we have another top influencer, George Perez, and he has 117,000 subscribers on his channel. Again, the link to his channel will be in the descriptions. Now let's get this money.
Hey guys, so I'm super excited to make this video for you today. Potential to bring us as investors some massive returns. Plus, I'll also be going over exactly what is happening with the stock market right now, and more importantly, how you can stay calm and win. So you're not going to want to miss this one. And I did a lot of research to make this video for you guys, so I'd appreciate an early thumbs up. But with that being said, let's not waste any time and let's get right into it. So my first pick is a company that nobody is really talking about on YouTube, yet they have an absolutely massive opportunity ahead of themselves. And in fact, they are projecting to 10x their revenue over the next 5 years. And the crazy part is that I truly believe that they can achieve this and much more. Because not only is leadership battle tested, but more importantly, they have already proven their ability to build a multi-billion-dollar empire in this very same industry. And that company is CuriosityStream, ticker symbol CURI, which was founded by John S. Hendricks, the very same man who founded and built the Discovery Channel from the ground up into the Goliath of a company that it is today, worth tens of billions of dollars and with billions of viewers worldwide. Now he left Discovery with one vision, which was to build something more impactful and that could grow exponentially bigger. And this new company is literally just in their infancy stage with a market cap of just 697 million. So the upside potential here is tremendous. But before we get too ahead of ourselves, what does this company actually do? So CuriosityStream is a streaming content provider, but what makes them so unique and different from other popular services such as Disney+, Hulu, and even Netflix is that they are laser focused on providing premium, factual content that engages, educates, and inspires their audience. So while most streaming services focus on movies, scripted series, and primarily fictional based entertainment, CuriosityStream is the opposite. They focus on factual based content and stuff that actually happened in the real world with the goal to educate. And in the words of their founder, they want to cater to the more than 40% of all television viewers who are deeply curious people and who love learning something new. And this is coming from a man who has had more than 35 years of experience.
Thank you, George, for our final stocks picks of the day, and thank you for watching. Please like and subscribe for more regular stocks and crypto picks alerts. See you on the next video.